today's video, I'm going to break down what exactly caused the US and Chinese trade war, why it matters still today, what it actually influences in terms of the markets from currencies to stocks and commodities. I'm going to simplify this in just a few minutes. Let's go. So what exactly is a trade war? A trade war is when countries start slapping tariffs or taxes on each other's imports. They're doing this to try and protect their own respective industries, and it is a form of economic warfare, but with taxes. Now, when one country slaps tariffs, the other will typically retaliate, and then it's like a tit for tat situation which escalates and disrupts global trade, disrupts supply and demand, and can be really crippling on for both respective economies. Now, imagine this. Obviously, China are a large export engine. They export a lot of goods across the world. They export electronics to the United States. The United States are bringing these goods in, and then obviously companies in the United States are then selling those to consumers. Now, imagine obviously the US slaps on some tariffs on those Chinese goods, say for example 100%. We've seen some crazy numbers, of course, within this trade war, 100%. Those products become more expensive. Then for those companies in the United States that are bringing in those Chinese goods, their costs are going up. They have to pass that cost on to the consumer, and then obviously the consumer's paying more. So it makes those goods potentially obviously more expensive. It makes those goods potentially less attractive. And if they're less attractive because the prices are too high, consumers are not going to buy them. It affects the businesses, and it affects both China and it affects US. So no one's really a winner as such with that. So it hurts everybody. And then obviously China may retaliate and then tax, for example, US soybeans or cars, which would hurt US farmers and manufacturers. Why did the US start it? Well, this has actually been brewing for many years now since Trump's presidency in 2018, and it's just been further escalating, and the tensions have been largely building. Now, here's why Trump did it. The first point, a trade deficit. So, for example, the United States buys a lot of goods from China. Okay, they're spending more than they're receiving effectively from China. Okay, China are not buying that many goods from the United States. It's just the United States buying goods from China. So that creates what's known in, when you look at a trade balance for an economy, it creates a deficit. Okay, because they're spending out and they're not receiving enough. So that creates a deficit. Effectively, Trump wants to narrow that deficit. I don't know, in an ideal scenario, Trump would love to have a surplus for China, but that's just realistically not going to happen. So he wants to shrink that deficit and that reliance and that all those outgoings that they have going to China and make that a little bit more tighter and competitive. 2, intellectual property theft. So the US has been accusing China of stealing their technology or being forced to hand it over in order to operate in China. 3, unfair practices. The US has accused China of manipulating its currency and heavily subsidizing state-run firms, which makes it very hard for US companies to compete. Trump's solution? Slap on tariffs on goods worth over hundreds of billions of Chinese imports. And obviously over time, China have retaliated to this, slapping tariffs on US soybeans, cars, and planes. China's response and the bigger picture. Now, China didn't just sit back and take this. They retaliated. They've been having enough of Trump trying to effectively bully them, so they're taking action themselves by slapping tariffs, as I know, on a lot of US goods, soybeans, cars, planes, and a host of other goods. Now, the reason they're doing this at the end of the day, they need to protect their economy. China, as I mentioned, is a massive export engine. They rely heavily on exporting goods. Okay, a lot of goods obviously are produced to a good standard and a very, very competitive price in China, and a lot of obviously economies are buying goods from China, so they need to protect their core business, their sole, well, not sole, but their large earner as the economy. And in order to do that, they need to make sure that they are not backing down from the pressure of Trump. So they're slapping tariffs back to let them know, look, we are a global power as well. Yes, America, you are the largest economy in the world, but we are the second largest economy in the world, and we are not going to be backing down. With all this that's being seen as well, obviously China being strategic with things as well, and making sure that they strengthen their trade ties with other big economies as well, such as Russia and India. Now, with this as well, guys, obviously this is a trade war front as well, but this comes down to, as we know in this world, everyone, well, not everyone, but a lot of this world is built upon power, trying to have that sense of power, especially when it comes to the big boys. And obviously United States and China are the big boys. So it's somewhat a little bit of egotistical elements to things there as well in wanting to be that global power and show that they are not, weak-handed or backing down. So it is a power thing as well in terms of these trade wars. Why should traders care about this? Well, it impacts the markets quite largely, okay? When trade wars are turning south, i.e. negative, and they're going back and forth, everyone's slapping tariffs on each other, US, China going tit for tat, and, these tariffs are getting out of control. Obviously, this has an impact on what's known as market sentiment, when we've got risk on or risk off. Now, when these are turning bad, we've got risk off trading. So you will see flights into safety, JPY gaining ground, Swiss franc, gold. These safe havens will benefit, but then we'll see pressure in the likes of the stock markets because these are riskier assets. Stocks don't like uncertainty, they don't like geopolitical tension. So we see risk off, investors capital flight out of stocks and into the safe havens, bonds, safe havens as I noted. Commodities will come under pressure, the likes of oil, okay? Why? Because at the end of the day, China is actually the largest oil importer in the world, and oil is very sensitive to market sentiment. If we're going through this economic downturn or geopolitical tensions, oil prices can come under pressure because fear of consumption dropping, okay? If we have an economic downturn, naturally commodity consumption is going to go down. So that has an impact on commodity. So when US and China are negotiating and these trade talks are ongoing, markets move. They're extremely sensitive there. We recently seen some developments where they had good talks in Geneva in Switzerland, so that provided some risk appetite to the markets. But I have to just say that with this sort of thing, and I've seen it in the past where it just takes a click and then things turn south again. You have to take it with a pinch of salt and just be prepared and be nimble and be agile to adjust because these things can turn south very quickly. It's still a long road ahead, and I expect us to be talking about tariffs still for the rest of this year of 2025. So to recap, this US and Chinese trade war is a way to fix imbalances and to fight unfair practices. Now, there is still a very long road ahead. At the end of the day, we are dealing with the two largest economies in the world, and it's is still obviously a large thing that comes down to a power trip where these guys don't want to show any weak hands. They want to fight for us, from a selfish perspective for their own respective economies. And as a trader, at the end of the day, it's down for you not to take sides, but instead to understand and see in terms of what moves from each respective side can have in terms of impact on the markets that you are trading, and best be positioned for that. So next time you see tariff and talks and Trump in the headlines, ask yourself, what are markets pricing in? I hope you found value in this video, and I'll catch you on the next one.